Well, China's Huawei is challenging NVIDIA with a new chip for artificial intelligence, according to the Wall Street Journal. Huawei has reportedly told potential clients that the chip is comparable to NVIDIA's H100. And there you're taking a look at some of the chipmaker activity early out of the gate here this morning. NVIDIA kind of shrugging off some of those potential competitive landscape pressures that they could face from Huawei. Of course, what's important to note for Huawei is that they are also one of the major manufacturers of the top performing smartphone and handsets in the world. And so with that in mind, they would have less of a need or a reliance on some of the fabrication process and chip design process of the likes of an NVIDIA or their current OEMs that are servicing them as of right now.
Yeah, so the reports say that this is comparable to NVIDIA's H100 chip. And the reason why that is important is because that is the chip that is banned in China because of restrictions, because of questions about national security. So NVIDIA had made chips that weren't as strong as the H100 here in the hopes of selling them to China. So the thought, I think, here, just some of the pressure that we could see on NVIDIA is if Huawei is able to manufacture this chip that is as strong as the H100 or is as advanced as the H100 chip, then that, of course, could dampen some of the demand that we could see from NVIDIA's chips that aren't as advanced. So I think that's some of the maybe things that investors need to keep in mind here as we think about what NVIDIA's business could look like in China. Obviously, this is nothing new. When we talk about the crackdown that we have seen from the Biden administration on the export of advanced chips, they have been very vocal just about the national security issues and things like that, and have cracked down very much. NVIDIA, far from the only chip maker caught in the crosshairs of this. But again, the reports here that Huawei could be shipping this chip as early as October. Then, of course, the question is, what kind of pressure could this actually put on demand for NVIDIA's less advanced chips in the region? So we shall see.
Here we have the daily price chart for NVIDIA Corporation, stock ticker NVDA. So as we can see here, the stock continues to trend higher, even with this recent news that Huawei is going to be competing with NVIDIA chips within the Chinese market region. Overall, this is not much of a surprise development given the fact that patriotic purchases for technology products tend to be increasing both in the East and in the West. So specifically what I'm talking about would be Chinese markets and then Western markets. Overall, this is a trend that has been building for quite some time. And this belief somehow that NVIDIA products are somehow a risk to Chinese national security does seem a bit suspicious at the very least. In my view, this seems to be much more directed at patriotic economic nationalism more than anything else. I don't really see much reason for NVIDIA products to allow for hacking of Chinese government devices and things like that. I just don't really think that there's much information that NVIDIA really needs to know in that respect. And as we can see here, the market is largely shrugging off this information and the stock price continues moving higher. Currently, what we're seeing is a near-term price high that has moved above the 115 mark. Currently, we're trading at 115.40, and this is significant because we have broken above prior resistance levels, which were found at roughly 108.80. If we move into the price chart here, we can see that this move is fairly significant given the fact that we are now trading above the entire exponential moving average cluster. Previously, we did manage to find support just ahead of the 200-day exponential moving average, which is this blue line here, this rising blue line. However, during more recent trading sessions, we have now broken above the 100-period EMA, 20-period EMA, and then finally the 50-period exponential moving average. If we pull out on the price chart a bit here and we do look at the relative strength index reading, we can also see that this sign of positive momentum is being confirmed by the recent activity in the indicator reading itself. Specifically, we can point to this upward move in the relative strength index, where we have seen the share prices allow the indicator reading to move above the prior downtrend line and its own exponential moving average. Essentially, this is significant because it suggests that the prior negative momentum that was governing the stock has now run its course. As we can see here, the share price did take a massive decline after reaching highs, all-time highs, coming in at 140.76. This would have posted during the this would be the June 20 trading session. And then ultimately, this price decline resulted in near-term lows coming in at $90.69. This is the low that was posted during the August 5 trading session. Interestingly, this price level here is important for several critical reasons. Specifically, we can point to the fact that this area does mark the 78.6% Fibonacci retracement of this prior ascending move. Specifically, this area comes in at roughly $89.03. So we're within about $1.50 here of that ultimate price low. And then in addition to that, we can see that this rising exponential moving average also comes in line roughly with this same area. So overall, it is quite interesting that the stock was managing to find support at these levels, because it does show that our technical price zones here are holding up and supporting share prices. Going forward, we would need to see a break below this level in order to turn the bias into the bearish direction. And if that were to occur, I would start to expect prices coming into a retest of this $75 zone, which can be found during the lows that posted during the April 19, 2024 trading session. If we take a look at the current trading volume readings, we can see that there is a moderate upward movement in these overall trading volumes. This does suggest that recent price action has additional confirmation, given the fact that more of the market is stepping in at current levels and making decisions to buy the stock. As we can see previously, there was a bit of a reduction in trading volume activity, and most of that trading volume activity was focused on the bearish direction. In other words, these were sell trades rather than buy trades. However, the tide started to turn here once we started to look at the July 31st trading session, because this is where an upsurge in share price momentum started to develop. Currently, the major uptick in trading volumes comes in during the August 5 trading session, and this is quite interesting because this also matches up with the $90.69 low that was posted during this same period of time. For all of these reasons, $90.69 really does mark the critical line in the sand for this stock going forward. If we were to see a break below here, I would expect a fairly strong amount of selling momentum to start to accelerate movements in share prices and cause them to fall lower. However, as long as we continue to see upward price movements with the share price trading above the exponential moving average cluster, we do have to keep this 120.15 level remaining in focus. Remember, this is the price high from the August 1st trading session. Overall, a break above this 120.15 level would be a significantly bullish event, and it would start to take pressure off of the downside. For all of these reasons, it is quite clear that NVIDIA stock is trading at a very critical inflection point near term. As a result, I will continue to watch these trading price levels going forward over the next few sessions, because breaks in either direction will be quite critical in terms of determining the stock's overall trend momentum here for the remainder of the summer trading period. Here's the current market update and price outlook for NVIDIA Corporation, stock ticker NVDA. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.